Hello and welcome to this video. In this video, we are going to look at the Finviz stock screener settings in order to identify high yielding, good dividend stocks. This is going to be a great video for people who are interested in dividend investing because one of the main troubles in good dividend investing is to be able to identify stocks which can satisfy a certain set of criteria and are good for basically dividend related investments. So without further delay, let's get started. Before we proceed further, a quick look at the disclaimer, which basically states that whatever information I'm sharing with you is only for entertainment purposes, and this is not any kind of trading and investment advice. Now, this is the Finviz screener platform. So I will leave a link to this in the description. The site is finviz.com, and you can access this site for free. They do have a paid version as well, which has more features. If you like the free platform, then you can try out the paid version. I will leave a link to that as well in the description. So in order to use the Finviz platform, in order to identify stocks which have a good dividend yield and which are good for investment purposes, we first need to understand what are we exactly looking for. So I am not just looking for stocks which have a high dividend yield. The reason is because even if stocks have high dividend yield, let's say 8%, 9%, or even 10%, that does not mean that they are going to form a good investment. This is because let's say I invest into a company which has an 11% dividend yield. 11% dividend yield is really high, it's really good. But there is no point that I invest $1,000 into such a company. I do get my 11% dividend yield, that means $110 in dividends in a year. But what if the stock price falls from $1,000? That means my stock valuation goes from $1,000 to $900. Then I've just lost $100 in the valuation of the stock, right? So it doesn't make sense because my net return in this case is going to be $110 of surplus money which came in because of the dividends minus $100 which I lost because of the depreciation in the stock price. So I'm just making $10 net, and this is not good. So we want to avoid these situations. We want to make sure that we're investing in companies which have a good growth potential, which have good presence in the market. We don't want to invest in very small cap companies because these companies are so volatile, the price is so volatile that within a few days, within a few weeks, they can actually lose 20, 30, 40% of their valuations. So we want to do a proper search so that we are able to identify stocks which have good growth potential. So that means if you were simply to invest in the stocks, those investments would actually turn out to be good. Those investments would be profitable without the need to depend on any kind of a dividend payment. But we will look for stocks which not just have good growth potential, but besides that are also paying a decent dividend. So in order to do that, first you click on the screener button here, and this will take you to the screener on the Finviz platform. So this is the screener, and here I like going on to the all tab. So I have discussed this in another video. I will leave a link to that video in the description where I have created a tutorial on how to navigate the Finviz platform and how each of the tabs work and how the settings can be applied. But this video is going to be focused on how to identify dividend stocks. If you are new to the platform and you want to basically go through that, I will leave a link in the description and you can watch that video, which is a kind of a tutorial on how to use this platform. But if you can just follow along, at least for dividend purposes, I will be showing you step by step how to narrow down to the stocks which are good dividend investment opportunities, and you can simply follow these instructions. So once I'm on the all tab, I can see a lot of settings here. So let's say the first thing I want to do is I want to look at stocks which are only from companies that are headquartered in the United States, and this is primarily being I'm doing it right now because if you know, there are a lot of Chinese companies which are listed on the New York Stock Exchange and the Nasdaq, and Chinese stocks are taking a lot of hammering right now because of the regulations that the Chinese government is putting. And so the safest bet at this moment is to invest in US companies. So that's the first filter I'm putting in, and you will have to manipulate these filters to a certain extent based on the macroeconomic conditions that exist every now and then. So if you're doing this next year if the Chinese stocks are doing really well, then you can basically remove this filter and you can filter you can basically include the Chinese companies. But if you find that certain continent or certain countries are not doing well, then you can simply filter those out. For now, I'm just selecting companies which are in the United States. then I don't want to look at companies which are very small. I want to basically look at companies which have a valuation, market capitalization of more than $2 billion. And the reason is because we have a lot of very small cap companies. And I don't want to be investing into those companies because, again, the share price is very, very volatile. When you're looking for a dividend related portfolio, the first thing you should be looking for is that your principal investment, that means the money that you're putting up to buy the shares, should never ever be lost, because that's the biggest risk with dividend investing, that when you buy companies, you just don't want to have very high dividend yields, but you also want to make sure that you are investing in companies which are resilient to all kinds of market pressures, pandemics, financial crisis, and stock market crashes, and companies which have a product line which have a kind of a global presence, so that those companies will eventually never go into bankruptcy. You don't want to lose your principal amount. That's the worst thing that can happen to you. So in order to make sure that we're working with well established companies, we are putting a filter to make sure that we're dropping out all the small, very small cap companies, because those companies have a very small market capitalization. So if they're paying a very good dividend yield, then that may be putting a lot of pressure on their finances in order to basically pay out that kind of a dividend. So we don't want to get into companies which, in order to meet the dividend obligations, have to put a lot of stress on their financials. So this is another filter that I've put in, and now you can see that I'm down to 1763 stocks. The next two filters that I'm going to put are basically going to be the target price, which I'm setting above price, and the analyst recommendation, which I'm going to put as buy or better. So basically what I'm trying to do is I'm trying to get the feedback from the analysts. So different analysts will give the feedbacks on different stocks, and I've selected buy or better. So we are only looking at stocks which the analysts feel are buy or strong buy recommendations. This way, there's a lot of investments decisions that people make based on analyst recommendations. The analysts are doing a lot of research most of the time. Now, I'm not saying that it's 100% accurate, but chances are that if you align with the analysts, you don't go against them, then you are going to be on the right side of things. Obviously, analyst recommendations are not the only thing we will be looking at. We will be doing the rest of the filters as well, but then we do want to be on the right side of the analysts, where the analysts are backing us up. And now if you see, the number of stocks that are available has gone down to 996. So let's continue putting the filters and narrow down to a universe which is basically sizable, where we can analyze the stocks and finally come up with two or three good investment opportunities. And it is not necessary, because dividend investing is investing for the long term. If you're getting into dividend investing, then you're primarily concerned about getting good dividend yields. So don't think about very short term investing. If you cannot find an opportunity this month, next month, or even the month after that, don't worry. Hold on to your money in cash, wait for the right opportunity, and only when you find a good opportunity you should invest, because you're investing in the long term, let's say 5 years, 10 years. Not investing for 2 to 3 months, but getting into a position at the right time is much more beneficial, rather than getting into a position very quickly and then realizing that you could have gotten in 3 or 4 months later when there was a much better opportunity available. So we will continue putting up the various filters. So I have put a couple of filters already, and now I also want to see RSI as oversold. Now, why am I looking at RSI oversold? Because I do not want to buy the shares of this company, any company which is trading at its peaks. What RSI, a 14-day RSI in the oversold region, basically implies is that this company, whatever I'm looking at, has actually recently had a dip. So I want to have a recent dip. I don't want to buy at the peak. So the now you can see I have 197 companies listed here. So these 197 companies are the ones which have basically taken a dip. And now we come to the main thing. What are we looking at? We're looking at stocks which have a good dividend yield, right? So that is one setting that I have still not put, that is still to be put. Now we have to decide how much dividend yield are we looking for. So my recommendation is look for dividend yields in excess of 2%. Don't look for dividend yields less than 2%, because the dividend yield is so low that you will kind of need a 2 million, $2.5 million account to make kind of $3,000 a month. So most of us don't have that kind of money. So it doesn't make sense, if you're getting into dividend investing, to look for stocks which are paying less than 2% dividend. You can hold on to those stocks, and from a growth perspective, like for example Apple is an excellent company. You can buy stocks in Apple, but they do pay a dividend, but it's very low. It's about 0.6 0.65%. So do not buy Apple stock with a view to generate income via dividends from Apple. If you're buying Apple, don't focus on the dividends. Your focus should be on the growth. That if you can buy Apple shares for, let's say, 120, $130, then over a period of time they will be trading around $200. So you can hold them for a year, 2 years, and then get that kind of a return. But from a dividend perspective, Apple, Microsoft, these companies pay very, very low dividends, 0.6%, 0.8% for Microsoft. So it really doesn't make sense if you're trying to live off a dividend income. If you're trying to live off a dividend income, you need to do one of the things. You either need to buy stocks which have low dividends when there is a market crash. So if tomorrow, let's say, there's a market crash and the entire market loses valuation by 40%, then you can go and buy Apple, because with that drop in price you will at least get a 1.5% dividend yield. Otherwise, you should be looking to buy in stocks which have a decent dividend yield, which makes some sense. And it all depends on the kind of money you can allocate to your portfolio. If you have $3 million, $4 million lying around, then you're perfectly fine buying Apple and Microsoft, which have very low dividend yields. But if you don't have that kind of money, then you need to look for high dividend stocks, but which may be not as good as Apple and Microsoft, but then they're decent enough that you can rely on them and generate a substantial amount of income, which is meaningful. So the next parameter that I'm going to set here is dividend yield, and I'm going to select over 2%. Now, if you want to have a more higher dividend yield, then you can even go with over 3%, but I'm going with over 2%. And now you can see we have narrowed down our universe to a total of 17 stocks. So now let's just recap what we have done till now. We're looking at 17 stocks, each of which at least has a market cap of $2 billion. So we are not looking at very small cap companies which can be highly volatile. We are not looking at any stocks which are not headquartered in the United States. So we are filtering out the Chinese, Brazil, and other stocks that are listed on the US stock exchanges. Uh, we are also getting in line with the analysts. So anywhere where the analysts are giving a strong buy or a buy recommendation and where the target price has still not been reached, we are only looking at those stocks. Finally, we are looking at stocks which have had a recent dip, and we are looking for stocks which at least have a dividend yield of 2%. Now what I can do is I can go to the financial tab here in the results, and you can see here that there is a column called dividend. So if you click on this, you can actually sort the entire listing, and I'll click again because it got sorted into ascending first time. So if you click again, now it gets sorted into descending, and you can see that we are having 17 stock listed here from with dividend yields ranging from 2.04% to 7.68%. So now this forms our universe. Now, are these all these investments really good opportunities? I am not saying that. Right now, I am not saying that. So the first thing that I want to look is at the charts, because I have 17 companies listed here. But in order to take an informed investment decision, I want to look at charts. And the way I do it is I will go to the candlestick charts, and now I want to look at the weekly charts as well. So remember, we have already done enough filtering. So these stocks are being recommended by analysts. These stocks have had a recent dip. So if you see in all these stocks, there is a recent downward move, right? So this recent downward move basically makes sure that you're not buying at the peaks. And within this, you know that the analysts are giving a positive recommendation, and these stocks, the current price is lesser than the target price, that the average target price that the analysts have basically set. So if I simply look at these companies, one good investment opportunity that I can straight away see here is AMGN, and I will tell you the reason why AMGN just stood out here for me, and Lockheed Martin also to a certain extent, but I would expect it to go slightly lower than this because it can fall down further. So let's look at AMGN in detail. So this is the Amgen weekly chart, and you can see that this particular company has a base around $230 here. In fact, it has a base around $220 here, and right now it's trading at $230. But the important thing to note is that this $230 was the $220 level was almost reached during intraday. Basically, this is a weekly chart, so it would not be day, but during this week, the price went to almost $220, which is a pretty strong base, right? You can see here that around the 210 to $220 mark, this particular band is a very, very strong base, a strong support for Amgen, and therefore it will be a good opportunity to buy this at this level. And let's look at the dividend yield. So dividend yield at the current price level is 3.07%. So this is not a bad dividend yield, and Amgen is actually trading at the bottom of this range. So if you look at the last year or so, it's been trading in this range of 260 to $220. So you are in a position to buy this stock, which has been which has been in this range 220 to $260, uh, and look for that 40% movement towards the upside. And while you hold this stock, you can also look to capture the 3% dividend. And so if I look at this chart, this bottoming, the long bottom, which basically here shows me that this downward move is about to collapse, right? Because the bears tried to push the price downwards, but then there was a long tail which was formed, and that basically implies that the bears lost control. So bears had a lot of control, they were pushing the prices down, but they are not able to do it further. So once Amgen, I would look at this still. Once Amgen reaches the 220 mark, and if I see an upward move, any green candle coming up, that is the time when I would possibly get into this. So Amgen, you can see here, has a price target of $255 almost. So and that's basically the upper price level. So the price target is pretty correctly set up. Whenever it reaches the price target, Amgen stock is coming down. So this can be a good opportunity to buy in. And you if you want to be more conservative, then you can look at the 210 levels, or even further here at the 196 levels. But this is one opportunity that we can clearly see is a good one. Let's look at Lockheed Martin as well. So Lockheed Martin again is a big company in the defense sector, and they basically have a lot of contracts with the US government as well. So if you see here, again, this is a pretty strong support level. So so LMT, sorry, is not there right now. It's trading around $358. The level is at around 340, $345. So we can again have this on our watch list. We can keep looking at it. And the more important thing here to see is look at the price target for LMT. It is $427. So this particular stock, and it's been there, it's not that it's not been there, it's been at that level. So this target is something which is not like a huge target, it is something which is achievable, and definitely it's on the cards. And this basically is like a $50-$60 movement which is possible on this stock. And now let's look at the dividend yield. So if you look at the dividend yield here, uh, it is 2.91%. So again, very close to what we saw with Amgen. With Amgen is pretty close to the buy price, which I feel we can get in. So it's in excess of 3%. I think if Lockheed Martin price falls down to 345 levels, then the dividend yield here would also become around 3.1%. So you can see here that this is one of the ways in which we can identify the stocks. And the good thing about this way of identifying stocks is simply, number one, you're not buying at the peaks, you're buying at the dips. So you're already buying these stocks at a discount. I will leave a complete link of a video in description where I talk about how to buy low and sell high, and another video where I talk about how to identify stocks on sale. So this is a kind of stock which is on sale. It's not on sale in terms of its valuation, but it's in sale in the respect that it's recently lost value, and the analysts feel that the target price for this is way above where it's trading right now. So this is one of the best ways that you can not just if you forget about the dividends for some time, if you just look at the stock itself, then you will basically realize that these are good investment opportunities simply to buy shares and hold them, because we are buying into good companies, we are buying into companies with a good market capitalization, we are buying into companies which are on the for which the analysts have a positive feedback, we are buying into companies which have recently had a dip and have chances to go up. So this thing is in itself a very good investment opportunity. On top of that, if you can get an additional 3 4% 5% dividend yield to go with it, so that really increases the amount of returns that you can get on your stocks. So for people who are trying to get into dividend investing, this is one of the easiest ways, and I have shown you the various settings on the Finviz stock screener, which you can use to list down all the stocks. Now, your selection criteria can be different, but the overall process on listing the stocks and then to see their charts and how to sort various tickers by the dividend yields that they offer, that process will remain the same. So this was one strategy that I basically deployed to filter out stocks which are good for dividend investing. But if you have some other filters, you can use whatever combination you want, but the overall process to look at these stocks will still remain the same. So that brings us to the end of this video. I hope I was clear in explaining how to use the Finviz stock screener to basically identify good dividend stock opportunities. If you have any queries or any suggestions, please leave them down in the comments and I will respond to that. If you want videos on any specific topic, you can leave that down in the comments as well and I will respond to that. And thanks for your time. I hope you liked this video. Please subscribe to the channel and share it with your family and friends, and I'll see you in the next video. Thank you.